Micheal Saylor was talking about the current status of Bitcoin and what importance does it have in the coming years. Micheal said that Bitcoin is not a bubble, and in times like that, when there have been so many rumors in the market, the most important lesson is to think for yourself. Think hard. If you lived your entire life in the United States and the last 30 years you had no monetary network and you had the money supply expanding at 6%, then every model that you had was formed with those two assumptions. If a new thing is introduced in a monetary network, let's call that Godzilla or a fire, a monetary fire. That's one new thing. If the money supply is expanded by 24% instead of 7%, that's the second new thing. These are two new ideas, and if you didn't take them into account before, then your models are based upon history and the history becomes irrelevant. According to Micheal, when you say it's a bubble, it's just another excuse to not think. It's just a knee-jerk reaction. For example, if you go and you chart the US dollar against the peso in Argentina, it looks the same as Bitcoin. So if your definition is up to the right as a bubble, well, then the US dollar is a bubble in Argentina. If you chart the US dollar in Zimbabwe and Venezuela, it also looks like a bubble. So if you are going to take that position, does that mean you are going to dump the US dollar? Would you trade back into the Venezuelan bolivar or the Argentine peso or the Zimbabwe currency for the same reason? The clear answer is no. It's obvious to you. But are you ethnocentric? If you can put yourself in the position of another country or another frame of reference, expands your worldview, then you see there are two reasons something goes up. One is it's being artificially squeezed up in a bubble. Another is there's just a rational flow of capital from a weak asset to a strong asset. You have got to ask yourself the question, are you invested in the weak asset and is it going to the strong asset or not? What you see here with Bitcoin is the flow of capital from weak assets to the strong assets. Micheal suggests everybody go look at the price of Bitcoin in Lebanon, where the currency crashed 90% or so over a year. Should you buy the Lebanese currency? Then look at the price of dollars in Lebanese currency. It's the same thing. So if you are actually a long-term currency trader and if you have seen a currency weaken substantially, then you have got a better framework for understanding what's going on here. The other key point here is people keep saying that Bitcoin is volatile, but people use the word volatility without thinking about it the same way they use CPI without thinking about it also. Micheal clears that CPI is not inflation. CPI is one of 1,000 measures of inflation, and you could also calculate monetary inflation. It's totally different number. Volatility is not risk. Volatility is a measure of risk. But it turns out that if you calculate the volatility of LeBron James on a basketball court, he's the most volatile player. He's also the best player in the world. So we can conclude the winner, the superstar, is the volatile one. The winning team is always the most volatile. Julius Caesar was volatile. Alexander the Great was volatile. So the only reason Bitcoin is volatile for the past 12 months, by the way, it is keeping to go up only. It's volatile because volatility measures the rate at which something doubles too. And if it doubles and then again doubles, it will be by any definition the most volatile, defined by volatility metrics. Are you going to run from it or towards it? Bitcoin has been growing at 200% a year, every single year, for the last decade because of its technical utility against a monetary inflation of about 7%. Bitcoin is growing 500% in the last 12 months. Why did it accelerate? What feeds the monetary fire? Money. The price is going to go up based upon technical utility, adoption, and monetary inflation. So when the rate of monetary inflation increases, that's one driver. So every institution that bought Bitcoin between March of 2020 and today was woken up by the change in the monetary inflation rate. So that was a jolting increase of adoption. Those two things put money in the system, which encourages technical utility. Square just added a new feature. You can now send Bitcoin to a Square's hashtag instantaneously without any fee. That's a technical utility. The amount of time and energy going in the Lightning wallets and Lightning network and other off-chain things, that's exploded because there are more money in it. So what you have is a monetary network that's being accreted and the monetary energy is flowing into it based upon the actions of the politicians and the central bank, but also based upon the actions of the corporations and also based on the actions of individuals. The head of the central bank in Turkey got fired because he had raised interest rates. Now people think the interest rates are coming down and they are going to be looser in their monetary policy according to Micheal. That's a big marketing thing for Bitcoin. The stimulus package is a big marketing thing for a digital asset will. Answering whether low interest rates will lead to lower inflation, Micheal explains that the issue is there aren't that many solutions to the problem. Bitcoin is becoming a more appealing solution as time goes on. But if there was no monetary inflation whatsoever, it would still be appreciating because of technical utility. Because there's value to be able to move a block of digital gold at the speed of light. It does move that fast. So the ability to move money with no counterparty risk or with minimum counterparty risk and on a programmable protocol that has utility, that would cause it to grow in any event. So one can think that there's no reason why Bitcoin shouldn't expand to flip gold and then to replace negative yielding sovereign debt and then to replace money markets and savings account and cash accounts also. That's a pretty clear line of sight to $100 trillion or even more, 100 times bigger than it is right now. And when it gets there, because it's a deflationary asset, you can't make any more of it. It should still accrete in value at the rate that the cyber economy grows in terms of productivity. So according to Micheal, that's basic Austrian economics. If the overall cyber economy and all the companies that are relying upon digital gold as their base layer, if those companies are growing 5%, then the Bitcoin will grow at 5% even after it's fully adopted by everybody on earth. It's always going to be a better deal than the underlying savings account that yields nothing and pays you in a currency which is debasing it at 7% a year. So guys, tell me in the comment section below, do you also think that Bitcoin is a good investment or do you have some different thoughts? And if you found this video informative, then please make sure to like this video, subscribe to our channel. I'll see you in my next video. Till then, have a nice day.